afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Sell-off intensifies in the Indian markets with both the benchmark indices trading with cuts of around 1% each. Nifty slips near the 10,250 mark, metals way, while PSU Bank extends support. JP Associates is the top F&O gainer in trade today. The stock gains over 10% after Rakesh Jhunjhunwala's Rare Enterprises buy stake. Shareholders that are a part of the VTB Bank-led entity that's bid for SR Steel have written to the company's creditors offering to buy out Revan Roya's stake. And TDP quits the National Democratic Alliance, says will move a no-confidence motion against the government, joining forces with YSR Congress.
Well, politics is a game of strange bedfellows as well, as we know. Anyways, that's besides the point. For now, the market's down about 1%. Don't know if it's got to do with that small bit of disruption out there in that state or otherwise, but we're down 1%. Just to put this fall into perspective, we need to start off with what's happening across the world. And then distinguish it with what's happening in India. So the European markets will come up on your screen, and look at that. Absolutely flat. DAX, in fact, is up about 1%. So this week, certainly, India has tended to underperform in a meaningful way. Not that the outperformance by some of the others is really large, but India has fallen when the rest of the world is looking fairly okay. I don't think the Dow futures too are showing any kind of major jitters. So this has got to do with our own issues. And mind you, today's fall is despite banks not doing all that poorly. If you bring up the Nifty 50 heat map, you'll see that the bottom row has a clutch of losers. None of them are those heavyweights. So IOC, BP, Tata Motors, the top 10 losers. Now Reliance has entered into that fray. Otherwise, Reliance was also not down too much. So Reliance is now the only one which has lost about 2% and is amongst the heavyweights. Essentially, the weightage of over 5% or 4.5%. The rest of the stocks are just about tiny toons in terms of the weightage on the Nifty. So we've fallen despite the heavies not correcting that much, and despite banks not looking all that bad. Private banks, one or two of them, and private financials, the likes of HDFC, may have fallen about 1.5%. But otherwise, the Nifty Bank is just down about 1/3%. So banks are doing reasonably well. We are not doing well because of other factors. Not too many gainers either. Bharti, Airtel and M&M, probably a couple of names to watch out for. But otherwise, not too much. And even in the broader end of the spectrum, I think just two pockets which stand out. Navneet will speak about the liquid universe for sure, but just bring up ITDC, MMTC, and those PSU names. They will come up on your screen. I think that bucket of stocks is doing very well. 13% higher for ITDC. MMTC was about 12 or 11% higher on fairly good volumes. Again, 12% higher. Look at the volumes here. 18 million shares traded. So these PSU names are doing reasonably okay for themselves. PSU banks too. I think Central Bank was the one yesterday, but Allahabad Bank and a couple of others seem to be doing okay in today's session as well, about 3% higher. So that is one universe, the PSUs. And on the flip side, select mid-cap IT names, the Mindtrees, NIT Techs of the world, have all come off today after hitting fresh highs in trade yesterday. They've come off quite rapidly. I'm guessing NIT Tech would form a part of that universe of stocks that Navneet you will probably address as well, because you've been talking about it almost every single day. Yeah, but today's the day actually where some bit of profit booking has definitely come in for both NIT Tech as well as Mindtree. We'll discuss all those stocks in further details, but let's do a check as to what's happening with the futures and options market right now. The sell-off has actually intensified. Nifty is trading below the 10,250 mark as we speak now. So the 200-day moving average, which is somewhere about 10,150, which we've defended twice and thrice in the last 8 to 10 trading sessions, becomes very, very crucial on the downside. We're almost at day's low, 10,247. Let's just pull up the futures and see if there has been any sort of contraction in the futures. No, actually, the premium is still intact to about 17 to 820 points as we speak. But yesterday, there were some fresh shorts seen on Nifty futures, and today is also the same case as the open interest is up nearly 7%. As Neeraj was highlighting that the banks have actually extended support, and it's for a change, because in the last few
sessions, whenever the correction has taken place, it was the PSU banking space, all the private banks which were correcting and dragging the index lower. But today, Bank Nifty is just down 0.5% and Nifty is down over 1%. I think some of the private banks are not doing well, from the likes of ICICI Bank. We've also seen HDFC, which are trading in the red. But remember, the correction has not been that much compared to the other heavyweights today. So HDFC Bank is just about in the red. Let's tell you what's happening on the option side. There is heavy amount of call writing, which has taken place. And this started right from the word go when the market opened. The 10,300 call strike as we speak has added nearly 24 lakh shares. And there are other call strikes also which are witnessing a lot of OI addition. Whereas on the put side, it is only the 10,400 strike which has seen some bit of unwinding. There is no major unwinding so far which is seen for other put strikes. So clearly, it's going to be a battle between the bulls and the bears. But keep in mind the 200-day moving average once again becomes very, very crucial. For stock futures, I want to address JP Associates, a stock which came out of the F&O ban today. Yesterday, it went up 17%, and we know the reason why. Rakesh Jhunjhunwala checked into this counter. But after coming out of the F&O ban, the trading activity is heightened. Therefore, a lot of fresh longs have been seen on the future side. The other one, Tata Motors, the underperformer among the Nifty constituents on YTD basis, has seen a cut of nearly 3%. And Neeraj, we've heard a lot of analysts talking about how this is the most cheapest company available in the Nifty arena, but still that correction continues for Tata Motors.
I guess the engine that was working beautifully is starting to show some chinks in the armor as well. JLR not having the prettiest of days, and I think this whole trade war conversation between the US and the EU playing its part out here as well. But let's talk about all of this and more with Alok Agarwal. He's fund manager for equity at DHFL Pramerica Asset Managers, joins us right now on the show. Alok, good having you. Thanks for joining in. We seem to be having some small issues of our own. The market, the last 3 or 4 sessions has been worried and uncertain, despite the globe not looking as tough a place. Is it the rumblings on the political front that are leading to do this? Because if you just look at the pure economic data, that's not turned out to be too bad.
In fact, Neeraj, if we take it back not just to last 3-4 sessions, if we take it to maybe last 6 weeks also, we'll notice that we have been actually one of the bigger underperformers across the globe. So it happened start from the budget session, thereafter a few announcements on restricted data sharing. Thereafter, we had the earnings season coming by as well. And then, you know, the politically the developments and news flow are not all that great right now. But at the same time, we saw some volatility picking up globally as well. So, but the global volatility, that subsided, things bounced back, but we are in our own zone of red currently.
So the question is, how long does this last? There's a view that was expressed by one of the fund houses that by virtue of this whole dividend dishing out process, domestic institutional investors haven't been big buyers. And while the equity flows have continued, we have seen evidence of that until now, almost every single day when we talk about the fund flows, DIs have been either net sellers or very marginal buyers, which shows that there is equal amount of selling that is happening, arguably due to this dividend process or otherwise. Would that be a key technical factor as well?
See, in the short run, we know that there are a number of factors that play through. Apart from the news developments, one cannot rule out.
We'll get to the long term, Alok, I'm sure of it. But just trying to gauge as to what could be the reasons why this volatility, and you highlighted some of the factors which are fundamental in nature. I was wondering if there's a technical factor at play here, and will that change course in April?
See, when you are trading at multi-year high valuations, the even smallest of news can be reasons or excuses for correction as well. So there are news developments plus the concept of dividend. Maybe that is also something that could be at play. Although we do not have any much evidence about that, but that cannot be ruled out completely.
But does it worry you, the kind of correction and the way Indian markets have been underperforming the emerging markets basket as well? Would you use this as an opportunity to buy or do some bit of bottom fishing, or you'll still wait out?
No, definitely we use this as an opportunity to shore up our funds and our exposures depending upon the segments and stocks and sectors which are offering opportunities. We do believe that as we started this year also, as we ended that last year and we entered into this year, the macros are not looking all that great as compared to a year ago, but the micro has started picking up very smartly. So the corporate earnings numbers have been pretty encouraging. Although in absolute numbers that may not look very great, but when we compare to recent history, they look pretty good.
So by macros not looking that encouraging, do you mean the global macro in form of commodity prices, etc.? Because as I look at the lead indicators which get thrown out, be it IP, be it CPI, trade deficit and the export number that got released yesterday, while it was a mixed bag, but export did show a sign of small pickup as well. Those frequent indicators are not looking all that bad.
I completely agree. It's not a blanket thing. So you spoke about index of industrial production. So 3 consecutive months of 7% growth. It's very good.
Yeah.
Inflation being under control, like coming to a 7-month low, that's also a very good number. But again, on this other side, we have this trade deficit and fiscal deficit, which raises some kind of suspicion whether we can actually achieve the numbers that we are projecting, or there could be things that can disrupt it.
Is that fear for FY18 as well?
Not much. FY18, we are almost towards the end of it.
Yeah.
But FY19, definitely, yes, that would be one of the things that will be watched very closely.
And what's the earnings growth that you're expecting in FY19?
See, FY19, as I see, if you talk about consensus talks about close to 22% on Nifty. Encouraging. Yeah, it's on a higher side. In fact, last 5-6 years, we have seen that every year we start off high and we scale it down. But this year, thankfully, so far, FY19 numbers have not been downgraded meaningfully. And if you look at the internals of the numbers, they show much more strength than the aggregate of it.
Okay, how big the political scenario will be for markets going into FY19, because there's so many state elections and we've seen few hiccups in the recent past in the form of bipolls. So do you see a major threat for the markets if the results don't go in favor of BJP?
So in shorter term, yes, there could be some impact. But for me, as I look at it, in case there's an impact, that gives even more opportunities to add up to the real good names that we want to add up.
So you remain bullish in the India story from a longer term perspective?
Absolutely, absolutely.
What would be your investment themes then?
So the structural theme that we invested into are the consumption side, primarily on the discretionary as compared to the staples. We continue to remain bullish on the rural side. Infrastructure has been seeing smart pickup in the order inflow as well. So that's where we are positive. So these are the segments we are extremely positive. We also have noticed that World Bank's projection for GDP for 2018 stands at a 7-year high. So when a global economic activity picks up, there are a lot of host of global sectors, globally looking segments that do very, very good. So we are positive on these names.
Interesting. Let's dissect a couple of these. Infrastructure, and I would presume that by that the primary reference is to road construction companies.
Primarily, because you have the evidence there more of so.
Right. So if that is the case, I mean, the largest road construction company or the largest company which has road construction as a part of its portfolio really doesn't move too much as a result of these order inflow build-up, because it's been enjoying this for a while. Would you therefore go to the mid-sized players which are now starting to get a lot of this which may start getting this TOT, the new thing that NHA has started, and from what NHA told us will embark upon in a meaningful way in FY19 as well? Or are you going for the standard EPC winning contracts, even if the company is small but the book-to-bill ratio is high, might be worth buying?
So the way we look at it is that the segment has seen a lot of consolidation and a lot of weak players have been already moved out of the sector. And companies which have been good on that execution track record, have balance sheet strength, these are the names we are looking at. They could be smaller in size, maybe could be mid caps or maybe smaller caps also. But primarily there are a number of mid cap companies in this segment which have had a pretty good track record of execution and have a good balance sheet strength to make sure that they keep on gaining the market share as well as keep on getting the orders here. So we are present there.
Okay, you're present there. And let's try and speak, by the way, as we speak, the index has slipped further, I must add. 1.2% now, 125 points down for the Nifty. In the Nifty Bank 2, just down about a third of 1% or 0.3% is now about 0.45% lower. So we are trading at the lowest point in the at least last half an hour, if not the lowest point of the day. For the indices, the benchmark indices, the Nifty in particular, we are trading at the lowest point of the day. Okay, let's try and distill the rural theme further, because it's a really wide basket. I mean, rural loosely put can mean anything from these FMCG staples to auto components to white goods, so on and so forth. Where is it that you find the possibility of making the biggest bang for your buck?
So what we are banking on primarily is things that go into improving the efficiency for the farmers. So when it is about mechanization, so be it tractors, we want to be in tractors, be it tillers, be it the fertilizers. So these are the sub-segments which will gain first according to us, because that goes first in improving the efficiency. Only after they improve the efficiency where the income levels go up, and then the consumption basket moves out. But yes, sir, the consumption part was, as it is doing well, that's pretty steady. But the delta we find is more in the efficiency improving themes on the rural side.
What did you make of this announcement yesterday while it was on expected lines? But since you mentioned fertilizer, I'm tempted to ask that to you. So a few months ago when we spoke to A. Velayan of Coromandel, that group, he mentioned that he saw some very positive signs in this whole DBT process. It will help cash flows in a meaningful way. Yesterday, Madras Fertilizers came on board and said that while DBT is good as a process, but it really makes cash flows come in bunches throughout the year and not really an year-round cash flow. At least that was his experience as well. But DBT getting extended across the country, does this give a bigger leg of impetus to the already well-performing fertilizer names?
I completely agree. So the DBT getting extended, so the stronger names will continue to remain strong. But yes, if the cash flows get bunched up in few parts of the year, then the working capital is something that these companies need to look at. So the ones that can manage the changing circumstances better will come out winners here.
What's the view in the metal space? Yesterday, there was another news report stating that the Trump administration is now targeting $30 billion worth of imports from China. If these stringent trade measures are implemented, what sort of impact or ramifications can be seen on other markets and also for India?
So we have already been seeing that a lot has been said and written about the changing tariffs here, and a lot of fear factor is getting priced in to an extent, can't say whether fully. But where I'm looking at it little more structurally and fundamentally is when global activity picks up, the demand for such natural resources is bound to go up. And when that's bound to go up, it has come at a time when the biggest producer decided to cut production for various reasons. So now there's a disruption in the form of tariffs. When that's getting priced in, according to me, that's an opportunity.
So do you see that extending it to the other sectors? So far, it's only aluminum and steel which has been announced.
So that can get extended depending upon the policy. Very difficult to project how a particular country will look at its own policy. Looking at the current tariffs, they did not impact too much directly, but it is the indirect ramifications that people are worried of. And that's getting priced in. That's why we are seeing the metal sector not doing too well off late.
Okay. Alok, really appreciate you taking the time out and being with us today. And thanks for speaking to us at Bloomberg Quint. You were speaking about disruptions. We've got a fairly disruptive company coming up next, in case it interests you. But thanks so much for joining in today and giving us your thoughts.
Thank you.
Okay, Intrasoft Technologies was the company that I was talking about. They are trading with strong gains in trade today, up over 5.5%. Ventura Securities came out with a note initiating coverage and saying that they believe there is a possibility of 122% upside for the company. Amongst key assumptions that I think they are putting out is that the revenues will move up from about 1,250 crores this year to 2,250 in FY20. The return ratios will improve meaningfully over the course of the next couple of years, and thereby the revenues and EBITDA and PAT numbers also will all go up. So let's put those questions across to the Managing Director and Chairman of the company, Mr. Arvind Kajaria. Mr. Kajaria, good having you. Thank you so much for taking the time out. I don't know if you got a chance to see this report, but if you didn't, they believe, this is a brokerage called Ventura Securities, who believes that your orders, revenue, EBITDA will grow at the rates that I was speaking about, 35%, and the improving ranking within the US retailers is something that will help you in executing this meaningfully. Are these reasonable assumptions, Mr. Kajaria?
Thank you for having me.
Pleasure.
I would not like to comment on other people's, brokerage's report, but what I can tell you is that, I've gone on record to say that we've been historically growing, if you see our results, at approximately 28 to 30% over the last couple of years. And we believe that, given the size of the addressable market, this is a sustainable growth rate, and we're, putting all our efforts and investments to ensure that this growth rate continues.
Okay, for the benefit of our viewers, Intrasoft, it's a multi-channel e-commerce retail company. They serve across 9 e-commerce platforms in the US, including Amazon, eBay, Sears, etc. And they also sell the products on their own website, which is 123 Stores, www.123stores.com. Okay, let's talk about how is business shaping up. We didn't get a chance to talk to you post your Q3 numbers as well. Has Q3 shown evidence of that kind of continuous growth, and how are things shaping up for calendar year 18?
Yes, we grew approximately 27 to 28% Q3 over Q3 16. So we were pretty happy with that. The market is very large and, obviously attracts competition. But, over the years, we've spent a lot of energy and investment into developing the platform. And I do believe that that platform is virtually ready now. And what that platform allows you to do is to meet the very strong standards of all the online retailers on which we sell on. And in turn, what that does is it gives us the ratings, which is essentially, a positive rating by our users, which affords us premium placements. And the moment you have that, your sales increase, thereby showing the top line growth that you've been talking about.
Sorry, can you just elaborate a bit on this platform? What is it that you're talking about, this platform, and what does it do for you?
So we've developed this in-house software, which basically ensures that we are able to list the products of all our vendors. So anybody who has a catalog, we are able to take online and list their products across the 9 platforms that you just mentioned. And on those platforms itself, because of our extremely high customer ratings, we are afforded a premium placement. So when a customer comes in there and he sees us as a number 1 recommended product, then the sale comes to us. And that is what the platform does, is to ensure that we deliver what we promise, and on a consistent basis, which is what gives us the high ratings.
Okay, so I'm not going by the Ventura report, but if you could give us your internal targets, what sort of CAGR growth can one expect on the top line and bottom line of your company? And I'm also quite curious to understand how sustainable the business is when the margins are somewhere about 1.5% to 2%.
Yes, we've been growing historically, like I said, at approximately 30%. And we believe that, given our background investments in whatever we have made and the way we built up the platform, we do believe that that is a sustainable growth rate that we look forward for the next couple of years. That said, it will not come without its challenges, which includes competition, which includes, investments in tech in an ever-changing and a very dynamic environment, especially so when our partners are very, very tech-oriented. So those investments would definitely have to come out of EBITDA because we are not looking to dilute capital. And what our endeavor is basically to fund this entire growth by using the supplier's credit and by generating the free cash flows. So what we're essentially working towards is a higher top line, a growth in absolute EBITDA. You may see some pressure on margins, but hopefully you'll see some growth in EBITDA. And because you're not looking to dilute equity, you should see a growth in ROE. That is what is our endeavor.
You're a free cash flow positive company, if I'm correct, right?
Yes, ma'am.
Okay, and the margin expectation will still be in that range of 1.2 to 2% going ahead with 30% CAGR growth in top line?
Yes, we are working towards that, but I want to tell you that, it will be under pressure because the moment you grow the top line, you invest a lot on bringing in new products on our catalog, and new products do not make the same amount of margins.
Okay.
They have to be seeded. So that seeding comes out of the EBITDA portion of the business. So it's a way that I would like you to look at.
Okay. Correct me if I'm wrong, Mr. Kajaria. I think 70% of your revenues come from Amazon. If you could tell us what are the other avenues from where you're getting your revenues from, and is there a concentration risk because 70% is coming from Amazon?
We sell across 9 marketplaces, including the brands, like eBay, etc. And your figure on Amazon is correct. We cannot change that because 70% of America shops on Amazon. And we are quite comfortable with that.
Okay. One question, I know you don't want to comment on others' reports, but let's talk about this growth numbers that you've had. I heard you mention that due to rapid growth, if you're indeed targeting that and getting newer products, your EBITDA may come under some bit of pressure. Over the course of the next 3 years, based on the business strategy that you are adopting, be it higher volumes or better profitability, what do you think will outpace the other? Would it be revenue growth, which will come in at a 25-30% CAGR for the next 3, but maybe EBITDA and bottom line growth not growing as much? Or would it be the other way around?
Well, we are in the retail business. In any retail business, the fundamental USP that you build is a top-line growth, because the more volumes that you generate, in turn, you're able to give your suppliers a higher growth, and that's where it kicks in of volume-based rebates, which then you pass on to the consumers to get the higher volumes. And obviously, the higher volumes, will have to be sacrificed by little investments into tech, like I've been repeating. So I do not believe that EBITDA will grow in same proportion. But having said that, I'm also saying that since you're not going to be diluting equity, any growth, in absolute EBITDA will give the stakeholders return that I'm talking about.
Yeah, okay, I get your point as well. One question, Mr. Kajaria. I believe sometime last year, and maybe my timelines are a bit off, but sometime last year, I think 2 US-based, institute-based pension funds or other or something like that invested or bought in large stakes into your company. I think 3% and 6%, if I'm not wrong, with a total of 10%. I think that's the quantum of stake that FIs hold in your company, right?
I don't have that figure as in front of me as of right now, but I do believe that yes, the FI holds a good percentage in our country, in our company.
Yeah, and just wondering, I mean, because there aren't too many models the nature of yours in the Indian listed space, and which is why I want your view. When large investors are coming in, and obviously they would be meeting you as well, they're obviously not just looking at what the bottom line growth numbers would be like. They're probably looking at the return ratios improving in a meaningful way by virtue of your top line growth and cash flow generation, as opposed to what you do. Because as you said, because like a large retail company, you're focusing more on the top line as opposed to the other factors.
Yes, I do believe you're right. If you look at an overall retail business, it's equally important to command a higher portion of the market share, both from a customer's viewpoint and also from the mindset of the suppliers. Because the moment you have that, then it becomes a kind of an annuity business where unless you do something dramatically wrong, year after year, the same vendor gives you that large portion of the business, which is what we are aspiring to have.
Okay, Mr. Kajaria, before I let you go, how would you review your 9-month performance? If I'm not mistaken, Q3 is supposed to be seasonally a very strong quarter because it's holiday season in US. But if I look at the Q3 numbers, they've not been that good. There was a degrowth in your bottom line.
Yes, we would have ideally liked to have a larger Q3, but there was a disruption in one of the categories, namely toys. And that disruption caused a little bit of a price war online because a lot of offline products moved online. And we did not participate or did not want to participate in that price war because it would have severely impacted our EBITDA. So from that perspective, yes, it was a little subdued, although we did grow by 28%, which by any standards is a very good growth. But we do have a business and we do have a long-term strategy. So we do not want to engage in any short-term opportunities or otherwise, as the case may be.
And have you recently changed your credit period days for all the vendors? If yes, if you could tell us what is it, and have all the vendors shifted to that?
We are currently at 14 days. Okay. We believe that moving forward, there is quite a potential to increase the supplier's credit. And that is where we are focusing our cash generation and our fuel for investments to come from. So yes, I do expect that number of days to reduce from 14 to 13 to 12 and onwards in the quarters to come. It's going to be a hard bargain, but we do believe that we have a sufficient brand name and we've made ourselves important enough to the suppliers to give us this facility.
Okay, Mr. Kajaria, appreciate you joining us today. Thanks a lot for giving us all those details and all the best. Well, he's not going by the brokerage report, and that says 10 days. So he's been conservative, saying that I think they're negotiating with all the vendors to bring down the credit days to almost from 14 to 12 to 13 days is what he highlighted. But definitely the stock's doing well because of the kind of target price Ventura has given in its report. It expects an upside of nearly over 100% in the next 1 year. That's about Intrasoft Tech. Markets are at 10,226, and that's the new low that we've seen for the day. The Bank Nifty trades around 24,670 as we speak. But let's talk about the mutual fund space. While HDFC Mutual Fund has increased stake in PSU players like NTPC, Power Grid, as well as State Bank of India in the month of February, it also decreased stake in companies like Yes Bank, DB Corp, ONGC. What were the other key portfolio changes last month? Let's bring in Jayesh Khilnani for more details. Hi Jayesh, over to you.
Hi Navneet. So this is in line with what the entire industry has done. Earlier in the day, we did brief analysis on the Motilal Oswal report, and that suggested that mutual funds have increased their weightage in utilities, telecom and technology stocks, and that is exactly what even HDFC Mutual Fund has done. So they have increased. The top two players that they have increased stake in is NTPC by about 2 crore shares and Power Grid by about 1.6 crore shares. Idea Cellular features in the list, and that was the biggest surprise that the Motilal Oswal report also pointed out in terms of the value that it garnered. So that they've increased about 1.5 crore shares, and some of the banking names like SBI and ICICI Bank that you were mentioning, that also they have increased to the tune of about 1.5 crore shares each in those counters. In terms of where they have sold, so you know, this is a mixed bag where they have sold about 70 lakh odd shares from of Yes Bank, DB Corp to the tune of about 36 lakh shares, Power Finance Corp, Tata Global Beverages, more than 30 lakh shares sold over there, and ONGC from the index that they have reduced stake to the tune of about 28 lakh shares. But in terms of where they have bought afresh and sold off completely, let's have a look at that. Earlier we were analyzing the portfolio of ICICI Prudential Mutual Fund, and in that they had just one stock where they had bought afresh, but HDFC Mutual Fund has in fact bought in more than 5 stocks. So Neela Infrastructure, that makes its way in the portfolio of HDFC Mutual Fund. Reliance Communications, that is something that I was mulling over. So they have bought about 44 lakh shares. Suzlon, IDBI Bank and Andhra Bank from the smaller bank names that have made its way to the portfolio of HDFC Mutual Fund. In terms of where they have sold completely, some very big names featuring in this list. So they have Hindustan Zinc that they sold off completely, just more than 8 lakh shares. Lakshmi Machine Works, nearly 4 lakh shares sold over there. Mindtree, which has had a good run for itself, that makes its way out of the portfolio, and so does Ramco Cements, but largely in line with what the entire industry has done.
Okay, that's interesting analysis. Jayesh, many thanks for joining us today and giving us that perspective. Okay. 232, the index at the lowest point of the day. Well, good time to get in some experienced voices. Let's start off our conversation with Manav Chopra. He's head of research for equity at Indiabulls Ventures, joins us right now on the show. Manav, really good having you. Thanks so much for taking the time out. It's been a while that we've spoken, so glad you could make it. The only problem is that the market doesn't seem to be in a really good spot right now. How are you approaching this as a trader for the near term and maybe for a slightly medium term?
See, for the near-term perspective, the markets have very important support close to the levels of 10,100, 10,150, which is likely to act as a cushion as the markets decline on the lower side. We've seen in last couple of trading sessions, the Nifty has been in a range of 10,100 on the lower side to 10,400. If you look closely, we are seeing some trading action between the 100 and 200 DMA. So consolidation happening at lower levels. There are a lot of short squeeze pattern that was observed in the market last week, and we saw a good rally from the support of 10,100. Won't be surprised to see a similar action coming in next couple of trading sessions. I suggest one should not get very aggressive when it comes to the index front for shorting at the current levels. because the risk-reward ratio is not favorable, and we are nearing to important support clusters. So short-term bounce is likely expected. If you look at also for the short-term perspective, the parameters are at the oversold levels, and also from the medium-term perspective, 10,100 would act as a very important make or break levels for the market. So I sense that it may not be very easy for the markets to breach 10,100 on the lower side on the closing basis, but in case if there is a pause at these levels, we could again see a retest of 10,400, 450 in the near term.
Well, we are definitely seeing a very, very sharp fall, and Nifty is now approaching the 10,200 mark in trade. In fact, the volatility too has gone up after a lot of trading sessions. 6% higher is not something we've at least seen recently in the last 3 to 4 days. India VIX is trading with gains of 6%. Manav, in terms of individual stocks, any recommendations?
I'm quite bullish on the auto packs, and specifically I like from the auto packs, Hero MotoCorp definitely looks very good for a medium term perspective. The stock has actually breached its medium term trend line drawn from its highs of 2017, and if you look at it on the weekly perspective, the stock has formed a very good base at the levels of 3,500. There is not much of a downside from the current levels, and also vis-a-vis if you look at the other sectoral with the margin of safety, auto packs and specifically Hero Moto looks very good at the current levels. The momentum indicators after a long time has given a buy into this, so one can look to buy Hero Moto at the current levels, keep a stop loss of 3,500. One can expect the levels of 3,820. The other stock I like is India Cement. From the cement packs, this stock has actually declined more than 30% from its peak of 2017. Also on the daily charts, there is a good double bottom formation, and the momentum indicators are suggesting some positive divergence. In all, it indicates there is the downside into this stock is quite limited, and looking at the current levels, since the stock is at 147, a stop loss of 141 could be placed, and we can expect a good bounce back from the current levels if the support of 141 is held. So the upside target for India Cement can be at 165.
Okay, so those are the top trading strategies. And remember, we've been talking about NIT Tech, how that counter has been trading around its all-time high levels. Yesterday, it did cross the mark of 1,000. But after touching that mark, there's definitely some profit booking which is kicked into this counter. Almost a day's low, 5.7%. Manav, if somebody was holding long positions till now in NIT Tech, what would you advise them to do?
Actually, this stock has been in a very good uptrend recently, and we've seen already a good rally from the levels of 740. Definitely some profit booking has taken into place. The stock has also breached its very short-term support levels, but it depends at what price the individual have got into. What I suggest is that the trend is still intact into the stock, and if you look at the move also from the near-term perspective, I think the stock could hold on to its important support of 900 and eventually again retest the levels of 1000. So continue to maintain a long position into this. In fact, a test of 900 could be another point that one can look to buy at lower levels.
We'll watch out for those as well. Well, stay on. So much more to speak about and discuss as well. By the way, Manav says stay on. By the way, the index is now 1.5% down, and the Nifty Bank too is participating with full gusto now. In fact, if I'm not wrong, the last 0.5% on the index is led predominantly by what's happening to banks. The Nifty Bank has had a sudden sharp fall, and I would guess that some of the private banks out there too would be contributing to this move. Anand, Tandon, market expert, joins us right now on the show with his thoughts. Anand, you're a soothsayer, if I can call you that. But, we were talking about these possibilities of we being in a limbo with bias towards the downside. It's playing out this week for sure, and it's happening at a time when it's not happening in the global market. So clearly we are worried about maybe the macro, maybe the political front and the developments thereof, and maybe more.
Well, there are two near-term factors which play out in March. One is the attempt by mutual funds to shore up their NAV, and the other by which is also helped by the fact that this is the month where most investors end up doing their financial planning. So they will be putting in money in ELSS and in the LIC premiums and so on. So you get some firepower there. And the other, which is the fact that there is a huge liquidity outflow because of the advanced tax payments that have to go out. So there is a competing force there. I think usually the advanced tax wins towards the second half of the month, and which is what I think is the near-term issue that we are seeing. Fundamentally, however, I remain strongly negative.
Strongly negative. So that strongly negative is a factor of levels to which or valuations to which the market will fall to, or is a factor of there being some clouds on the horizon, and once they clear is when an investor like you would take that decision?
So you know what, the advantage I have is that I don't have to sell anything. I am not trying to peddle mutual funds or portfolio management plans, nor do I have to worry about what my investors will think, because I have nobody. The advantage therefore I have is that I can be what I really want to be, which is extremely bearish. The reality is that for most frontline companies, if they were to halve, they would be expensive. And I'm not making this comment lightly. I have, Hindustan Lever may be doing very well, but at 55 times earnings, it is not cheap by any stretch. We have got used to it. The fact of the matter is, not too far back, it used to be 35 times and still quite expensive. So therefore, even if you assume that you continue to go into this kind of a phase, the reality is that we are not talking about a 5-10% reaction if this is a real correction. If market were to focus on valuations alone, there is absolutely no justification for most of the companies in the index to be even half the price that they are at.
Anand, could you quantify for us how much more correction can one expect from the current levels now?
Well, that is best done by technical analysts, and they will do it incrementally so that there are no heart attacks.
No,
but if you do assume that this is a serious correction, and this is something that is happened 4 times in the last 30 years. So if you look at 1992, 2000, 2008, and now at this, if you really assume that the market has made a top, in each of the previous corrections, I think I pointed it out last time, the market fell by 60% or more. So, I don't think we should be looking at a near-term bottom or anything of that sort. We should just be trying to move with the market. Most people will obviously not take such a drastic view. But the reality is that those kind of events do happen, and they happen with remarkable frequency. So it is not as if it is completely out of the playground. That is an eventuality that can happen. The best case situation is that we have a very rapid earnings growth, which will then justify the fact that the market will not correct, let's say, more than 30%.
I'm going to rephrase my question there, Anand. At what levels you will be comfortable buying or making fresh investments into Indian markets?
I think, different stocks bottom out at different times. So I don't think you can take a view on the market overall. The market does affect making an investment decision only to the extent of small and mid-cap companies, because they obviously tend to collapse when there is no liquidity. But if you were to look at the frontline companies, I think, a 30% correction in most of them from their peaks would be a reasonable time to start looking at them. Many of them have actually already corrected 10 to 15%. So therefore, you may want to see which of them have the highest earnings growth potential, and another 10% downside may give you an opportunity to start looking at it.
As we speak, the market breadth has worsened and worsened considerably as well. Clear pain points out there, and this is not a weekend phenomenon or anything. It's purely happening, I would reckon, because of a clutch of factors, including the rumblings around the political arena, which might now start to maybe just worry a couple of people. Unfounded as those worries, maybe, because I don't think you can derive too many conclusions about what will happen on the political front. But guest after guest, conversation after conversation today has mentioned that, oh, look at what's happening with the political tie-up down south. Look at what's happened to the bipoles in Uttar Pradesh. Too soon to call it a spade, I would think, but well, stranger things have happened. So let's wait and watch.
Yogesh had done a piece how the valuations of Indian equities is shrinking compared to the other emerging markets and developing markets. There was an article in Bloomberg itself today highlighting the same chart, and they did highlight factors like earnings growth is a point of worry, and the other factor they highlighted was political worries, because we've got so many elections this year followed by general elections.
No, so that is one part, yes, that you should be worried about volatility because of what if the political outcomes in the state elections and the national election doesn't turn out the way, the direction that the market wants. What the point that I'm trying to make is the bipolar elections that have come out and what's happening right now in the state where Anand Tandon is residing in currently is not necessarily testimony of what will happen. People are now starting to extrapolate what's happened in these two.
It's all extrapolation, that's right.
That's the limited point. Again, I may be wrong here, but just a sense that I get by having two sets of conversations with multiple people. Actually, Anand, come in. Are people making too much of this? Your conversations, your thoughts as well, because you are, in a manner of speaking, in the epicenter of what the current issues on the political front are. But there's also this bipoles that have gone by. But the distinction is that somehow, while bipoles after bipoles in Rajasthan, Uttar Pradesh and a few other states seem to be not going in BJP's way, the larger elections, they are turning out to be fine.
There are several issues here. First of all, we have found that actually whenever there are coalition governments, development tends to be faster, and definitely GDP growth is faster. And this, if you look back over the last 20 years, you will find that this is essentially true. Whenever we've had a majority government, they've pretty much frittered away their advantage. I think we are pretty much seeing some of that again. Maybe it is because the government deficits tend to move up when there are multiple parties at the center, and that obviously fuels economic growth. You know, the fiscal deficit number is a bogey, which for some reason we have started to worry too much about. The reality is, in an economy like India, which has huge unemployment, you need fiscal deficit of a reasonable amount, and trying to be too controlled on that is a problem. The second thing is that before we have an election, I think every time all the regional parties, they want to free themselves of the fetters of a coalition so that they can go out and see how much they can expand. I would not read too much into it. If actually there is a large central party which comes back to power, you will find that the satellites, as it were, will again converge. We have seen that happen in the Northeast just now. It is not as if any of the regional parties had great love lost for the BJP. They have tied up because they are in the center. And I'm reasonably sure if there was another coalition in the center, they would have tied up with them as well. So I don't think from a stock market point of view, you should worry too much about politics. That is a sideshow which continues to happen. I think the only thing that matters is economy and the earnings. And as I said, if the government had been following a policy of letting people decide where they want to spend the money rather than taxing them to the end of the earth and then deciding where they want to waste the money, then I think the economy would have been in better shape and the voters also would have been in better shape. Purely coming back to the politics, incumbency is a problem. We have seen that in the center and every other state as well. So therefore, right now, since the incumbent government is the BJP, they have to fight that in the next election. And that is obviously going to throw up some jitters.
Well, politics will definitely take center stage this year, because despite of concerns surrounding the job growth last year, the one factor which played in favor of market was political stability, as BJP did win some big states like Uttar Pradesh. But let's see what happens going ahead. Anand, I want your view on a couple of these public sector companies. You know, since yesterday we've seen good gains for companies like MMTC. Maybe that's got another reason because there's a board meeting on March 19th. They will be considering bonus issue. But any investment opportunity in any of these public sector companies that you see? ITDC too has been doing pretty well in the last two sessions.
I think by and large there are two kinds of companies there. Those where their operating performance can actually be improved or are improving and therefore have a reason to be bought. And the others where there is a government action impending, whether it is buyback or disinvestment or something else. The event-based companies I find difficult to do because unless you have got inroads into the government, it's difficult to be ahead of the curve there. Performance-wise, I think some of the companies, to my mind, have started to show some signs of doing well. For example, I think BHEL is a company which looks to me like it is beginning to show some signs of a turnaround. The power sector has been rather bad, and that has reflected on BHEL. But they have started to get orders outside the power sector and even in nuclear and so on. So I think that there is some chance that given the price performance equation, that could be something that may be worth looking at. At some stage, the PSU banks, not all of them, but let's say a State Bank of India certainly, and perhaps a Bank of Baroda would be something that would be interesting. But I think that still another 5-6 months before the market will begin to even think about looking at that. The oil marketing companies will show tremendous performance this quarter because of the refining margins that they will have. Whether that will sustain or not is a different ballgame, but I think there is not much to lose there. It could be a place to hide.
Okay, by the way, as we speak, it's about 170 points now. It's getting worse today. And the last day of the week is seeing the worst fall of the week as well. We are officially trading at the low point of the day, sub 10,200 as well. I don't even want to talk about these moving averages, because now we can go and stay below those key 200-day moving averages or thereabouts on any of the key indices for a while and then come back as well. So that bounce back has kind of lost its meaning for the time being. But this is not looking good. In fact, looking pretty worrying. Manav, Chopra, I know you mentioned that people should not initiate fresh shorts because we are close to some key support levels. For people who have an existing short position, ride it with a trading stop, or would you presume, or would you believe that there is merit in maybe taking some money off the table?
Definitely, I think since we are coming to important support levels, and if you look also on the weekly perspective, the Nifty is near its important low. So I recommend that one should definitely cut their short positions, book partial profits, and it's important to also maintain a trail stop loss. So maybe around a stop loss at 10,250, which is another important support level. So just having a trail stop loss close to 10,250 could protect their further losses into the picture. Another thing I'd like to highlight, Neeraj, is looking at the Bank Nifty chart and the Nifty specifically. This is the 7th week that the markets have witnessed decline, and if you look on the historical perspective, not more than 7-8 weeks consecutive declines, the market has witnessed the flow on the downside. So there is a high probability even on the time cycle that we may see a halt around the 10,100 and eventually see a bounce back.
Well, we're now trading actually below last Friday's closing of 10,226 as well. Remember, Monday was a gap up opening, and from there we picked up some momentum, but now we're below 10,226, which was the closing on last Friday, 1.6% lower. And you can see that in the options data as well. There was huge amount of call writing, which we highlighted, but that's also become even more aggressive now as we speak. The 10,300 call strike, in fact, has now added nearly 27 to 28 lakh shares. And I just want to highlight, when we started this show, there was no unwinding seen for the 10,300 put, but that's also started to unwinding after the 10,200 mark on Nifty has been breached. So clearly, the long positions are being unwound now at these levels. But Manav, one stock I wanted your view on is all the Reliance, or so to say Adani Group stocks. When the market falls, because they're high beta counters, they tend to fall. So if I look at the top losers now for the F&O Securities, the Reliance Naval, Reliance Infra, would you go ahead and initiate any short positions in these?
See, if you look at the chart of Reliance Infra, in fact, the stock overall has been in a downtrend since quite some time, and after a short-term consolidation, Reliance Infra has also breached its important intraday support levels, and with volumes, the stock has breached its support of 435. So I think in the near-term perspective, the stock would retest its recent lows of 400, and eventually chances are quite high that it would even break it on the lower level. So Reliance Infra is definitely a short. The other stock which looks weak at the current levels is Adani Ports. The stock after forming a short-term consolidation below its long-term averages has breached key support levels again, and the momentum indicators are still in the sell mode. So Adani Ports faces important resistance at 372, 374 on the upside. So any short-term bounce on the intraday levels, one can look to initiate this short only for next couple of trading sessions, but eventually I think the stock has a potential to test the levels of 350, even 345 on the lower side.
Okay, and bucking the trend today are stocks like Syntex, that's up nearly 9%. HEG too has gone up in trade. If you could just pull up the intraday chart of HEG, we'll get to know. Is now trading with gains of nearly 6 to 7%. With that, if I can also pull up Graphite India, and let's see if that's also gone up with the price movement we've seen in HEG. So Graphite India is also trading with gains of nearly 3%. But let's also get you the buzzing stock of the day, and I guess Nikki Mirchandani today is tracking Ruchi Soya. Let's go across to her to find out why is she tracking that counter. Nikki, over to you.
Thanks, Navneet, for that. Well, the stock has risen as much as 14.3% today, which is its highest level that we've seen at least in a month now. Volumes remain somewhat moderate at 3 times its 30-day average volumes on NSE, while the stock has fetched a negative return of more than 34% over a past year. But then what's really brewing behind this up move would be the company has received bids from 26 applicants to acquire 51% stake in the company, which is a business line exclusive. This is perhaps the largest number of bidders which are actually participating for your insolvency proceedings of the company. Well, firms including ITC, Patanjali and Emami have actually expressed interest and placed their bids for acquiring 51% stake in this company, and the bids are quoted in the range of around 8 to 10,000 crore. The Ruchi Soya is expecting the deal to be completed by June. To give you a little rundown about the company proceedings, it was back in December 2017 when the company was admitted to NCLT proceedings on a petition filed by Standard Chartered Bank and DBS Bank. It has a debt of around 12,000 crore or maybe a little around 12,000 crore as of December 2017. Back to you guys.
Thanks a lot for that, Nikki. So if those are stocks that are doing well, there is a stock which isn't doing well. And before we thank Anand, Tandon, there's one view on this one. Anand, last week or maybe early this week, I was doing this piece on stocks which haven't gone anywhere or are underwater since the time the demon rally started. So the Nifty may have given 30% odd returns, but a clutch of names, as usually would be the case in any rally, which are underwater. There were 2 or 3 interesting auto and auto-related names which came out. The Tata Motors twins, Bosch was amongst the other ones as well. Any thoughts on Tamo? Because it's getting beaten down day in, day out, trading close to 52-week lows, and a complete contrast to what the large caps or the Nifty Auto has done in the last 12 to 15 odd months.
The auto sector has reflected domestic consumption growth, and Tamo has got nothing to do with domestic consumption anymore. For the best part of the last 2-3 years, their earnings were coming from Europe, China, US, whatever. And India was probably 10% or less of their overall business. Now that the India business is beginning to show some signs of life, the fact remains it's still too small. So it's the case of the tail dog wagging the dog. Now, the other issue that we have is that, some significant portion of their business comes from the US. And if US and Europe start to fight in terms of trade, then, obviously the performance is going to be inverse, given that besides, of course, the issues they have with their portfolio and introduction of new models and so on. So overall, I think, it's not in a great spot at this stage. If you are going to back the domestic business, I think you're better off looking at companies which largely drive business from India. Okay.
Anand, Tandon, we'll leave it at that. Thank you so much for taking the time out and joining us and giving us your perspective. That's an ominous sounding Anand Tandon, I must add. He's been, well, reasonably bearish for a while now, but he's making a very strong point today that he is, without a shadow of doubt, bearish, and bearish on the large caps. Predominantly the mid caps and the small caps will follow their own suit. Bottom up stock picking could happen, but it's bearish on the large caps in the current point of time. In here on as well. What I think we should do is take a very quick break. On the other side of the break, Sarvendra Srivastava, an independent market consultant, will join in. He should be very happy. His shorts should be working beautifully right now. So he should be a happy man. We'll talk to him about what is his theory going ahead. Manav Chopra, of course, stays on with us. And we're getting one more fundamental voice, but more importantly, post 3 p.m., get you the Fab 4, get you what dealing rooms are recommending in the session today, and of course, closing strategies from both our experts, Manav Chopra as well as Sarvendra Srivastava. Stay tuned.
Where there is life, there is hope, there is meaning. But life has its downs. as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Zindagi ke saath bhi, zindagi ke baad bhi.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Emerge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
All right, back with countdown right here on Bloomberg Quint, 1.4% down, maybe a bit of a pullback from those lows, but still under the weather. Let's get in Sarvendra Srivastava, but he's independent market expert. Joins us right now on the show with his thoughts as well. Sarvendra, good afternoon. Thanks for joining in. You must be happy. Your shorts must be making money. The question mark is, while the long-term trend, according to you, remains down, and now we've established that through various discussions, what about the immediate trend? Are we close to certain lows from where we can show a bit of a bounce as well? Are you seeing that on your charts?
Yeah, very good afternoon. See, the happiness is relative in the sense, yes, shorts have been making money. We have been among the very few advocating the same over the last many months now. And this was expected. For us, it's no surprise. This had to happen. Now, the only thing is that, yes, the mid-cap space, especially if you look at stocks, they were 30%, 40% or more corrections have been done. That can be the basket probably to look at if someone wants to nibble on some longs, probably a mid-cap basket of 40% or more decline could be a basket where you can search. But on the market, I would still believe that you can't have two separate poles where mid caps have done 50, 40, 50, 60% corrections and the large caps are still close to 52-week highs. So I think that 15 to 20% correction from wherever the large caps and the leading names have made their highs from there, I think a 15-20% correction, healthy correction is long due for them as well. And probably that is now which is visible. So as we were discussing last also, I think names which have not corrected, Ashok Leyland, Reliance, HDFC Bank, Voltas, I think these would be the names and more. These would be the names probably where they have not corrected and probably long due corrections are now pending. So today we have started this downtick with Reliance and with being a heavyweight, I think it will definitely drag the market along with it. And three names, if you add two more names there, which is HDFC and HDFC Bank, if all three fall, say 10%, Nifty can easily be down more 500 points. So I would stick to my targets of 9,700, 10,000 range. I think more close to 9,700 is where I will start searching and putting some longs.
Sarvendra, so you're still recommending going short on Nifty, but what about the individual stocks? Any trading recommendations there?
Oh, absolutely, absolutely. All three shorts today as well, just like last week. This week now, we have to first also understand that we are already closing. By now. We are already negative for the week. So this bounce was just intra-week. You can't even see it if you look at a weekly bar, it is red. So it's just an intra-week bounce. You can only see it on a daily chart. You will not be able to see this bounce on a weekly chart because it will be one small shadow on the bar. So I think that is the most negativity to take on from this week's close, that we did not manage to hold that bounce, and actually we've come back from the high, almost now 300 points from the high. We've kind of fallen back and we are breaking the close of the previous week and closing below. We are assuming that still 25 minutes to go, but I think we are fairly, on the Nifty, we are fairly clear that this will be a weekly negative close. And I think that's the most negative point this week. So to add to that, I would say I will have all three sell calls. The first one is a sell on Reliance. As I said, that's one stock in the large cap space which is showing weakness. So my sense is that within a pure short term, next 3 to 4 sessions, 861 on the spot prices, all levels are spot. So 861 on the spot is what I would look as a target on the downside. And I would recommend a short, keep a stop loss at 907.60 intraday and take those shorts. Intraday tick means it should not be a tick stop loss. Just watch it out for 2 minutes, 5 minutes, 5 minutes closing. If Reliance stays above 907.60, I would exit that short. But my sense is that it should not, and probably head towards 850, 860 on the downside. The next one is again Asian Paints, again from the same basket, stocks which are large cap, not fallen along with the market. Look to short sell that for a target of around 1100 on the downside for Asian Paints. Again, a 5-minute closing stop loss there. 1171.60 is what I would recommend. And the last one again is a sell on again Bata. This is again a loved name, not fallen much, still making a distribution pattern, could head for a larger decline as well. But next 3 to 4 sessions, I would say that Bata will fall back towards 680, 681. And I would keep a stop loss there at 725.60 and short Bata as well. All spot levels on all three stocks.
That's a really bearish Sarvendra Srivastava even for the near term. By the way, IT as an index might be doing okay, but the index or the HCL Tech Mahindra and a couple of others are just showing that bit of a bounce or some bit of defensive buying there. Just look at those moves of those stocks and they are surging up in trade. But the large cap space is seeing some major casualties. The Nifty is now down 177 points. Last few minutes of trade, Larsen & Toubro, Asian Paints, Bharti Infratel, Hero MotoCorp, all of those have shown some sharp gashes downwards. There's just a sudden fall that is coming into these 5 or 6 IT names, and in fact Axis and IndusInd Bank too, maybe not as pronounced as a Larsen & Toubro, but those two have come off in the last few minutes of trade. So select large caps are seeing some bit of pressure now, and which is dragging the index down to its lowest point in the day today. At the non-Nifty names, Cox & Kings has shown a sharp gash in the last few minutes. Thermax has shown a gash in the last few minutes of trade. There is weakness in Alchem Labs, again a sharp downtick, and Bajaj Holdings has shown a very sharp pullback as well. those a few names out there which are coming off and coming off very, very hurry. Yogesh Mehta, Vice President for Research Sales at Motilal Oswal, joins us right now on the show. Yogesh, what's this scare about? We are charting a completely different course the last 2 days compared to what the rest of the world is doing.
Yeah, Neeraj, somehow we are also experiencing the same thing, that whatever positives, like, a very good GDP number, controlled and lower inflation, very well IIP numbers. So all these are positives are getting discounted nowadays. Whatever positive news flow comes, that is getting discounted. And even a global trade war which has been taken place, post that we have seen all the negatives for the market. Every bounce there is a selling by FIs, majorly by FIs. So fundamentally nothing wrong, because we are at the end of the financial year now, and result season will start from say 10th of April or 15th of April from now. But there is no reason. It is just a sentimental effect that nobody wants to go long at this point in time. Probably next week FOMC meet would be the main reason. That's why we have seen, last week closing was 10 to 26, and today we have breached after 4 days. Otherwise, market was very much in range-bound consolidation range.
Yogesh, even if the rate hike comes about next week by Federal Reserve, I think this one is already priced in. And what you're suggesting, why our markets are falling, is because the FIs are also selling up. Do you think this phenomena would continue in the new financial year? And can we expect more of support actually coming in from the domestic institutions, which so far through 2017 have been buying into Indian markets?
DII's support will remain there throughout the tenure, it seems, and SIP inflows are more than $1 billion now. But the major selling of FIs will remain there, because any rate hike there in US, then it will be again outflow will continue for the rest of the financial year. Plus we have elections on the state election that will drive the sentiment on a cautious mode, not on the negative side, but will remain always cautious. So risk-free trade, wherein bond yield is around 2.8, 2.85% there, and any rate hike further, gradual increases in the rate hikes there in US will again will remain a continuous outflow of FIs. And rupee is also getting weaker. So somehow all these adjacent factors are also correlated, and market sentiment is getting negatives and negative. Earlier were the days where buy on every dips, and right now it is totally changed. It is sell on every rise.
I just want to pull up the intraday chart of NMDC. I think there was a sharp move on the upside, though the stocks once again started to come off from those higher levels. There you go, 1.3% higher for NMDC. Manav, on the charts, any trade do you see here at 125, 126?
See, actually, metal as a pack, it's looking quite weak. You've already seen a breakdown in Tata Steel, Hindalco, and if you look at NMDC, the stock is observing some sort of a corrective rally on the upside and has stiff resistance around the levels of 128, 130. So I don't see the stock go beyond 130 on a very immediate basis. But on the other side, if the stock breaks below 121, you could see a fresh downside move start for the stock. The overall momentum for the stock continues to be weak. The stock has witnessed series of lower tops and lower bottoms and has been in a downtrend. So for me, if I have to pick the stock, would not be for the long side, but take a fresh shots on the lower side once if it closes below 121.
Okay. Well, the other one which is just holding about to its gains is Balkrishna Industries. It's one of among the top F&O gainers after JP Associates today. So Balkrishna is sitting with gains of nearly 3%. Sarvendra, I know you're not going to give any long call, but what are the charts of Balkrishna Industries suggesting?
I would say that it's broken long-term averages, and but this is one stock probably which has had its share of correction from 122 to around 70 odd. I think that's a decent correction. So I don't have anything against it. No major calls here and no major views, but I think with a slightly bullish bias, this stock could test 85-90 purely from a trading angle. But as I said, on a slightly macro basis, you'd want to wait out and look at once the market bottoms out, and then you will start bottom fishing.
By the way, As we approach the close of the markets, let's get a sense of one, what dealing rooms are recommending in the session today, and two, what is it that could get in the F&O ban or come out of the F&O ban? Let's first do that F&O bit with Navneet. It's just about time, in fact. Navneet, what's the list looking like?
I told you in the morning I'm not going to cover Steel Authority, but can't help it. It's still topping my list today as well. So Steel Authority has added a lot of open interest on both the March futures as well as the option side. 94.8. So once again, it missed by a whisker. 95% is the mark. If it breaches that, a stock goes into the F&O ban. So watch it for Steel Authority. The other one where some bit of build up on the future side and also on the option side has been seen for HDIL. So do watch out for these counters. And ITBI Bank, JP Associates, both of them came out of the F&O ban for today's session. And after coming out of the F&O ban, there's aggressive addition seen on the open interest of both these stocks. So ITBI Bank and JP Associates are likely to breach that 95% mark. And just one stock which is very, very close to coming out of the F&O ban is Balrampur Chini. As you look at the overall OI as a percentage of market-wide position limit yesterday was somewhere about 80 or 80.2. It has to breach the 80% mark in order to come out of the F&O ban. So 5 stocks, Neeraj, to keep an eye on.
Well, lots of them. Let's wait and watch what happens to some of these. In just moments from now, we'll also tell you what dealing rooms are recommending in the session today. By the way, it's just looking slightly sketchy right now as to what would be happening. Actually, Yogesh, what's the Motilal Oswal dealing room talking about right now? I mean, further weakness, and if so, what amongst the heavyweights could show that weakness? Because now we also have Reliance starting to pitch into this sell-off.
See, Neeraj, on the dealing room side, the sentiments are still, towards their negative bias, and downside has got open now to the extent of 10,070 and below 10,000 also, because as I mentioned, it is sell on rise. So 10,430, 10,500 was the level till last week, and now it has gone to has come down to 10,350 or odd. So upside is getting limited, and the sense on the dealing room side is go short on the higher side for trading purpose only. That is one, and nothing apart from that. And the large cap side, see, PSU Bank and pharmaceuticals are not working very well. And even on the short side, when Autopack has moved up, especially two-wheelers, so there's some kind of a short build-up is happening. And metal sector, due to this global trade war, that has created some kind of negative sentiment, broad base. So across the board, and Vedanta, Hindalco, Tata Steel, these all are on a short side.
Okay. Time now to get a look at what dealing rooms are recommending in the session today. Yatin Mota is standing by with his channel checks. Yatin, we just asked Yogesh about what's happening in the Motilal Oswal dealing room. You would have spoken to a bunch of others. What are they saying?
Well, Neeraj, the kind of fall that we have seen in the last half an hour is simply unbelievable. In fact, the dealers are now, looking at winding down their trading positions in a very aggressive manner. The kind of fall that we have seen, 200 points near about on the Nifty. So the kind of confidence the dealing rooms were there 24 hours back, probably that confidence has got shattered, and now they are looking, to slightly unwound or lighten themselves on the trading side, because the volatility has suddenly spiked up significantly. And today being Friday, the pay-in payout, and being March end, dealers are that was very cautious on the overall markets. The VIX index also gaining by nearly 5%, and that is something which indicates how volatile we have turned in the last few minutes of trade. But as far as dealing rooms are concerned, we have a couple of stocks. Canfin Homes, of course, there has been a news report talking about how various entities are interested in bidding for Canfin Homes. So on the events and on the F&O trends, dealers are positive on Canfin Homes. Apart from that, do watch out for IIFL Holdings, as domestic funds are set to be sellers in trade today. Remember, in the morning we were talking about how IIFL has been outperforming other brokerage stocks, and probably now there is some profit taking which is happening in at high levels. And finally, in the cash market segment, sorry for that, Syntex Plastics is one stock wherein HNIs are buyers, and they're expecting a 10 to 15% short-term move.
And Syntex Industries, Yatin, is up in today's trading session. Thanks a lot for bringing in all those details. Well, the markets are just a slight bit of recovery has been seen from those levels of 10,180, 185 thereabouts. So 10,196 is what we are seeing right now. But let's get you some closing strategies going from our technical experts. Manav, any BTST or STBT strategy that you have for us?
See, at the current levels, NIT Limited looks good. The stock has seen a good support around the levels of 92, 93, and also on the weekly perspective, there has been a good base, which suggests there is limited downside. The volumes are also confirming the upside coming into the stock. So I think at the current levels, one can look to buy NIT Limited and have an upside target of 97, 98. One can keep a stop loss of 92.50.
Sarvendra, your top closing strategy would be?
I would say for a BTST, I think Reliance has pulled back nicely. So anybody taking a trade here at around 905 on the futures and around 902, 903 on the cash. So anybody taking a trade here at 903, let's keep it on the cash. I would say that you'll keep a stop loss at 907.60 and look for a target of around 890 on Monday itself. And if someone wanting to hold for more, then I think we have already given a target of around 860, 861. So either ways, you can choose Reliance.
Okay. Just Manav, before we thank you, one quick word on the IT names. They just started to make a move upwards. Would you trade them, HCL Tech or a Wipro or a Tech M?
Yes, absolutely. In fact, we've seen IT as a pack showing good move in last couple of weeks, and specifically HCL Technologies, faces important hurdles close to the levels of 965, 970, and today being the weekly close, the stock is likely to close above the important levels of 960. So I think going forward, HCL Technologies could be the pick for the next week from the IT space. It has important support around the levels of 965, and also the volumes today are showing some good move on the upside. So HCL Technologies could in fact see some rallied close to the levels of it could see a move of at least 5 to 6% in next coming few sessions.
Interesting. Manav, we'll leave it at that. Many thanks for joining in and giving us that perspective. Yogesh, it would take brave hearts to put in money to work in a scenario like this, but you believe that there could be some worthwhile ideas to invest fresh money into?
Yes, see, there are certain businesses which are which will poise confidence and has set the confidence with the management credibility. So such stocks which are a consistent growth oriented, where correction has happened or not, that is a secondary. But sound fundamental stocks will certainly perform, because with the external reason, it is not evident enough that everything under the sun will go down like what we have seen the free fall. But strong fundamental stock will perform from here. So we believe that the private sector banks would be a sector where people or investors can bet their money on at this point in time from current levels even.
Interesting. Yogesh, the last few days, the reason I'm asking this question is, by the way, today HCL Tech is now up even further from where it was. But the last few days, the IT names have really shown that spark as if it was a normal bull market in continuation. Just look at that HCL Tech move, a sharp up move of almost 2.5% from the lows and 1.7% currently. What is it that you guys are telling your clients to do in this IT space? Because I've seen reports coming on a clutch of other pockets, right? Future Consumers, Sanghi and a lot of others. What about IT?
Neeraj, for the IT especially, see, we were bullish for Q2 and Q3 numbers for Mindtree. But now the growth is, we will have to watch out for the annual result and then we will take our call. Otherwise, we have a 800 as a price target. There is a fairly valued currently with 20 times FY19. So we'll watch out for the annual numbers and then we may revisit our stance on that, or the reiterate of the recommendations. Whether with mid-cap IT especially, we believe that Hexaware, NIT Tech, all these are growing with 15 to 14% growth rate for this financial. Otherwise, it was lower for the last financial year. So those are fairly valued. I'm not sure with what reasons they are rising right now. So we don't have much of a confidence on the growth side, but Mindtree is one, and another one on the Tech Mahindra side. We have strong confidence over there with the management call and other fundamental key ratios, and even LCC is turning now, or is on a break-even side. So there we believe that rationalization of valuation multiple is a little about 15 to 15.5 times P multiple. There we have buy rating on Tech Mahindra in semi to large cap, And on the large cap, of course, Infosys and HCL Tech, these are the names where we are confident of growth prospect from here.
You're not worried about Mindtree's latest disclosures? I mean, by that I mean this promoters paring their stake a little bit. That's not a worry?
As of now, no, not bit of worry on that part. As I mentioned, we will again review this. We will review the data points and analysis on Q4 numbers, annual numbers, and see on other front also on the disclaimer side, other promoter in many companies have trimmed down partially a decimal percentage point also, and investors and traders are just going short on the counters, and stocks are going down nosedive day by day. So there could be one of the opportunity there, but apart from mid-cap IT, the mid-cap IT space, the rest of the stocks are going strong. So probably we will not see those kind of impact right now, but possibly that could be a worry a bit, not much.
Well, Yogesh, two stocks which have been doing pretty well even in a weak market. One of them is Titan and the other is DMart, and I guess you guys were one of the first few brokerages to come out with a sell rating on DMart. What's the view from these levels in both Titan as well as Avenue Supermarts? Both of them currently trade at days high.
Yeah, see, DMart is, we came out with a report, but on the valuation front, we have a sell rating there. But the way the stock price is going high with the results which came, which were very much in line with our expectation with the growth. We are under strong belief that it will grow by 35 to 50% CAGR over the next 2 years, and number of stores are getting open, and that will straight add to the bottom line. This is growth over value one should play on. However, we have a sell rating, so won't be able to mention anything much on DMart, but it's a great story to be in, and the footprints also getting expanded over Maharashtra and Gujarat at present to Rajasthan and other multi-state also. So those are the positives with a good EBITDA margin is also going high. So there we believe that story can continue further, but however we have a sell rating there. Titan with GST and from non-organized sector to organized sector, it's a very big market and it's a big opportunity for Titan. With a trustworthy name post the fraud which has happened, it will again add more to the credibility of Titan, and we believe that with 35 to 36% CAGR growth can be there for next 2-3 financial year, and we have a strong buy recommendation there on Titan.
Okay. Strong buy recommendation there on Titan. That stock has inched up a bit. By the way, as we speak, Wipro is amongst the principal gainers because HCL Tech and some of the others have cooled off a bit. And while the index may have bounced back, I was just looking at the set of losers. Bharti Infratel remains that one top loser in the last few minutes of trade. Sarvendra, one final question. Bharti Infratel or Bharti Airtel for that matter, if you track them?
I track both. I think if I have to pick and choose between the two, I think setups on Bharti are something that we have liked, and we have discussed that earlier also on your channel when it was much lower. I think this correction, I would say, is a good opportunity in the sense that as long as the stock now stays above 380, on the medium-term setups would still, I would still go with the medium-term setups and say that we are in to retest 480, 500 on the upside. So as long as we stay above 380, the view remains bullish here, and I would definitely believe that this could be one stock which can actually surprise everyone on the upside. So I would be bullish on Bharti Airtel.
Okay, bullish on Bharti Airtel is the call coming in from Sarvendra. Well, market's about to close. We're back above the 10,200 mark. Let's head across to Neeraj to find out how exactly the closing is panning out. And Neeraj, once again, a sharp sell-off seen in the last hour of traders. So, and for the week now, we're in red.
Yeah, and you know, the banks were not participating for most part of the trading day, but the Nifty Bank too participating in the last 1.5 hours of trade or 1 hour of trade. About 1.25% or 1.33%, 1.5% for the Nifty. So not a good day in the mid caps and the small caps too. The market with worsened in the second half, and therefore these two ending over 1% apiece. The heat map or the sets of winners and losers, not too many winners to be honest, save for select IT names, and that too includes a Wipro. The other is not too much. And look at the list of losers though. Coal India That's technical factors at play here too. But look at the Tata Motors twins, the Tamo twins, both of them down about 3.2% apiece. Asian Paints amongst the top losers. It was one of the best performers in trade yesterday. Pharma, auto, Adani Ports, so infrastructure, nothing's been spared today. And mind you, save for Reliance Industries, which I'm trying to hunt as well, there aren't too many heavyweights which have come off quite rapidly. In fact, Reliance has recovered quite smartly in the second half, in the last 10 minutes of trade. So the top half is not dominated by too many heavyweights, but deep cuts, deep gashes into those select few names. 2.5%, 3% seems to be the order of the day today. What about the mid caps though, Navneet? They were doing well for most part for the first half, but then completely disintegrated.
That's right, Neeraj. They did succumb to the selling pressure that, started off with the benchmarks. Let me start off with the losers today. Stocks which were going up in the last few sessions saw a bit of profit booking. So Quality was one of them. That saw cuts of nearly 6 to 7% in today's session. The other one was Cox & Kings, I guess. That fell in the second half of the session, as the intraday chart will tell you. Just in the last hour of trade, bit of recovery from those lower levels, but still closing the day with cuts of 5%. Profit booking seen for stocks like NIT Tech yesterday. It did cross the mark of 1,000, but from those higher levels, it was trading around those all-time high levels, saw profit booking. Remember, this was a stock among the F&O securities, which was also seeing a lot of long build-up. IFCI is the other one, which did succumb to selling pressure in today's trade again. IFCI almost closing the day around the day's low mark. And obviously, the Adani Group stocks in a market like this tend to fall. So Reliance Infra, Reliance Capital, both of them came under pressure. Both the F&O securities closing the day around the day's low mark. Let me highlight a couple of gainers now. The public sector companies which were going up since yesterday, stocks like MMTC as well as ITDC, they maintained their gains in today's session as well. And Syntex, that also surged in the last hour of trade or somewhere thereabouts. Syntex saw gains of nearly 7 to 8% in today's session. JP Associates, we know the reason why the stock's been moving up. It came out of the F&O ban, plus Rakesh Jhunjhunwala checked into this counter. So this counter, despite being a very high beta counter in a market like today, sustained at gains of 9%. Navneet Education was the other one alongside Balkrishna Industries, which did maintain their gains towards the end, Neeraj.
You had to bring up Navneet Education, didn't you? Let's look at the final tally for the day and for the week as well. I think we'll first actually address the day. This is 1.5%. Get the advanced decline ratio, get the turnover, and get the contributors list, and then we'll look at the week as well. This is what we were talking about. The market breadth changed somewhere around noon, or actually slightly before noon, and since then it's only widened to about 1:2 in favor of the declines. The turnover, maybe it's just picked up some steam in the second half. The cash volume certainly high, 41,000. Were there some bulk deals? I don't know if there were some bulk deals, but these are unusually high cash levels on the NSE as well.
Maybe there was some cash-based selling that one has seen in today's session. I don't remember any major bulk deal taking place
unlike that
today.
day when TCS had a bulk deal and therefore it was 44. Today I don't remember, but cash market volume is fairly high, not so much on the F&O side. And then the contributors, Reliance Industries, even despite the recovery, contributing to 15 points. As we said, not too many other heavyweights which corrected too much. These are mild corrections for an HDFC and an ICICI bank, but lack of winners, I think, also playing its part here. And now the weekly performance, very interesting that select stocks like TCS, of course, for individual reasons have gone down, and therefore TCS and Coal India bring up the list of losers here. But interestingly, Navneet, you will see that banks of all shapes and size, leave out a Kotak, all shapes and size, PSUs, private, large, mid, small, have all made a comeback this week.
That's right, Neeraj. And I think the strength and the support where the market continues to get is from the IT pack. And this is just the weekly chart that we're looking for Nifty constituents. I've been watching out for the Nifty 500 index on YTD basis. Top 5 or top 6 gainers on that are all IT stocks.
Yeah, but this week certainly banks made a bit of a comeback. And despite that, the index ending flat but marginally in the red, 0.22% down this week. Anyways, final thoughts from our experts. Yogesh, to you first. If somebody was looking to put fresh money to work, I don't think we got a chance to talk about your stock recommendation today. What is it that you like and why?
See, Neeraj, clearly, as I mentioned, that private sector banks will provide a very good opportunity, whether the correction has happened or not in the stock price. But the confidence will remain poised there. We believe that non-vehicle loans share will get improved by next one and a half year. Current book value is around 380, and next year, if the growth rate is 20% that they have done in last over so many quarters, so that will remain there, and 435 to 440 would be the book value. Even the financial ratios, if you consider CASA ratio or be it ROA, ROE, all are very much in line with what the progress growth could be. And a strong asset ratio is also around 3% plus. And that all provides a great opportunity for this for being into this company with a management vision. By FY20, they would be increasing their customer base to almost 20 million plus, two times from the current level. And the branch expansion as on date is something around 1350 to 1370, that they want to take it up to 2000 in next 1.5 years. So all this vision with the strong growth opportunity will be there for IndusInd Bank. And as earlier also we have many a times interacted that private sector bank will have a better wallet share over public sector bank, because of the so many of event has happened which has which is not so good for the confidence for the public sector bank. So that all wallet share will go to private sector bank, and these are the top 3-4 companies where one should be remain invested.
Okay, so that's the fundamental call coming in on IndusInd Bank. And finally, Sarvendra, closing thoughts from you for next week. Can we see more selling pressure? And let's say if there is a mild bit of pullback as well, would you use that as a shorting opportunity?
See, I think now what happens to the globe, especially US, because that is one market which is slightly more resilient than probably Europe and Asia, because Europe and Asia are more close to their panic lows that they printed in the first week of Feb. It's only the US which is still around 1,500 points higher from that number, and once after the panic has never gone and kind of really tested that number. But Asia, including Nifty and Nikkei, we have broken that, and actually we are lower than that number now as of today's close as well. So I will say that US is critical now to the whole scheme of things. Will the bounce come or not come? If a bounce comes in US, which is meaningful, then yes, on a long-term 200-day average, both for the Nifty and the Bank Nifty, you are very close to those numbers. I think you can have a small bounce. There's no stopping a bounce here, because definitely on a short term we are slightly oversold. So in that sense, probably Nifty could bounce back towards 10,500, which it did this week, and then got sold into. So I would say even if a bounce comes, I think 10,500, 10,550 thereabouts would be the maximum over the next 10-15 days, and you would see incremental selling coming at those levels. And eventually, as I said, with some time being spent in this range, probably the break ideally would be on the downside. So which means once 10,200, 10,150 decisively gets broken, you would see incrementally more selling coming in. And once Nifty enters 4 digits and breaks the psychological 10,000 mark, I think again you would see some a cat out of the bag, and you would definitely see some nervousness coming once 10,000 is broken. So till that is not happening, you could be in this 10,200 to 10,500 range. I would not be surprised. But yes, overall weakness is now creeping in. So stock, one by one, more stocks are inverting. So now if I can see on a shorter term, medium term average, I think 80% of the universe is now lower than say a 50-day average, and 65% of the universe right now in NSE 500 is below the 200-day long-term average. So that is definitely a sign of incremental weakness coming in. And the more you stay below 200, the more weakness creeps in.
Okay, Sarvendra as well as Yogesh, thanks a lot for joining us today and taking us through your thoughts on the market. Well, it's time for us to slip into a quick break. Don't go anywhere. We'll be back with more on the other side.
life so lovely. Live life happily. Oh, plan your life the way you want it to be.
LIC's new endowment plan offers a combination of protection and savings.
Invest to save and get insurance. Bring home eternal happiness.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public-government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Welcome back. You're still watching Countdown with us on Bloomberg Quint. Well, let's check what the European markets are doing right now. I guess it's been a mixed start there as well. CAC is trading in the red, whereas FTSE 100 and DAX are showing some sort of green ticks as we speak. Let's head across to Johan Potts, who joins us from the London studio with a complete lowdown on the equity action being witnessed there. Hi, Johan.
Good morning from London. After that rather lacklustre session you had in Asia, there's a bit of a mixed picture here in Europe. We're about 2 hours and 10 minutes into the trading day, and there's quite a lot of green on Bloomberg screens around the continent. Germany's DAX trading up 0.3%. The FTSE MIB in Italy up around 0.2%. They're two of the best performers. But shares lower in Sweden today, and also in Russia, the MySex trading down 0.4% ahead of this weekend's election. On the FX markets, the dollar is mixed against major peers, but a jump in Japan's yen helping drive down the Bloomberg dollar index. Elsewhere, West Texas crude steady above $61 a barrel. That's the signs of stronger US fuel consumption balance OPEC's forecast that new supplies from its rivals will exceed demand growth this year. And finally, keep an eye on Bitcoin today. Those of you who like to watch the charts will have noticed that Bitcoin's 50-day moving average has dropped to its closest proximity to its 200-day moving average in 9 months. Now, crossing below that level, something it hasn't done since 2015, could signal fresh weakness to come for Bitcoin. And that's something that technical traders call a death cross. On that cheery note, I'll hand back to you.
Thanks a lot, Yuan, for bringing all the action from the European markets. But moving ahead and focusing back on the Indian markets, the 12,000 crore fraud at the PNB has unleashed a blame game between the government and the RBI. Last month, Finance Minister Arun Jaitley spared no punches when he observed that, and I quote, "Unfortunately, in the Indian system, we politicians are accountable, the regulators are not," unquote. And it seems to have hit home. On Wednesday, RBI Governor Urjit Patel delivered a passionate speech blaming lack of regulatory powers over state-owned banks for the lapses. What it essentially highlights is the want of accountability. We spoke to Shankar Iyer, political economy analyst and columnist at Bloomberg Quint earlier today. He explains why Urjit Patel is only half right. Listen in.
The truth is that authority for institutions comes from the powers that they exercise. Now, the Reserve Bank of India, after the PNB Nirav Modi scam, said that they had alerted banks thrice since August 2016 about the misuse of, say, the SWIFT feature. What did they do after that? Did they order a special audit? Did they inform the owners of the bank? Did they inform the auditors of the bank? What were the steps that were taken? You know, sacking of directors or changing of board is the ultimate weapon. But the Banking Regulation Act has several other provisions. For instance, issuing directives. Now, did anybody stop the Reserve Bank of India from issuing the prompt corrective action steps? Did anybody stop them from similar directives that they could have issued to banks? Have they acted on the banks that have not adopted SWIFT, not connected SWIFT to core banking? These are all open questions about accountability, and which is why I argue that the real fugitive in the Indian scam landscape is accountability.
Right. Shankar, I take your point. You're basically arguing, saying that the Reserve Bank of India go ahead and exercise the powers it already has instead for asking for more. But let me come back to what the governor points out. And the debate really is about ownership and regulation. And he points out to this whole dual ownership or dual regulation that becomes a point of debate. Is this... I mean, again, the underlying tone in all of this is that different sets of rules applies for private sector banks and for government-owned banks. Is the governor, in a sense, hinting that privatization is the way out?
Well, the reason why I said that Urjit Patel is half right is because the issue that he has flagged, that there is a dual supervision system which causes fissures in regulation, and therefore banks escape between the two supervisory regimes. That is true. And this is not the first time this has been flagged. This has been flagged in the PJ Nayak committee report, which was accepted by the government in May 2014. Now, between May 2014 and now, we've had two governors. What did they do about the recommendations of the PJ Nayak committee report? Zero. So to argue that there is a regulatory issue in the ownership of banks is right, but that is not the complete story. And I don't think the governor is arguing for privatization, because if you see his statement, he's talking about minimal change in regulatory environment to bring about a neutral, or rather a level playing field between private sector banks and public sector banks. Now, the question is the government going to give up this special dispensation even as they own between 58 and 80% of public sector banks? I don't think so.
You know, one final question, and this is with respect to, this is not the first time we have seen the governor of the Reserve Bank of India being in conflict, or at least having a different point of view publicly against the finance minister. This may be the first time that Governor Patel has done it so openly. Where do you think this is going to lead?
Well, you know, if you look at the language, the lacing of, if you want to say, call it melodrama or metaphors from epics, it suggests that the governor and the institution of the Reserve Bank are hurt and anguished. But that is par for the course, because somebody didn't do the job. Somebody was asleep at the wheel. So the issue really that the governor, who is arguing, who sort of very dramatically said that we will be Neelkant and we'll swallow the poison. I'm sorry, Mr. Governor, the name Urjit is the name of Lord Vishnu, and you cannot appropriate the role of Lord Shiva. So the thing that needs to be done is that to re-examine what the Reserve Bank of India does and what it should not be doing. I think it is time that we looked at separating banking regulation out of the Reserve Bank and leave the Reserve Bank to focus on monetary policy and foreign exchange and other such issues which are core economic, and banking regulation, which is a very specialized area, should be handed over to a prudential regulatory authority, as has been done in Commonwealth countries like Australia, in the UK, in Canada, and 38 other economies.
Well, on to other discussions now. It's going to be the biggest show of strength by the opposition in the last 4 years, and one of the parties leading the charge was a part of the government until a week ago. The Telugu Desam Party and the YSR Congress are the two parties who have moved for a no-confidence motion against the Modi government. We spoke to Sanjay Pugalia, editorial director at Quintillion Media, and he believes that this gives opposition politics much-needed momentum. Listen in.
These are parliamentary tactics and parliamentary rituals. Everyone, be it opposition, be it ruling party and voters at large, they should enjoy, and people should make their political point. But it seems that no confidence motion is not being accepted by the speaker as of now. So opposition has an opportunity, or they have a reason to now again prove their case and at least get it accepted, and then go for debate and make your points. One point I want to make is that TDP has not been able to understand how this new BJP works. And why are they sounding so shocked now? I do not understand. With the kind of single party majority that BJP has, it was very clear to many of us that they are not going to bother about allies, be it TDP, especially the bigger allies, or be it Shiv Sena. They will always look for new allies, smaller allies, smaller parties, individuals, and new customers. So TDP should not have been shocked, and they should have been anticipated this since long. Now there will be an anti-incumbency narrative against Chandrababu Naidu's outfit, vis-a-vis anti-establishment plank of Jagan's party YSR and Pawan Kalyan's party, and BJP may decide to ride on that. So this should have been very clear to TDP right in the beginning. But yeah, it is a bad commentary on NDA and coalition dharma by NDA, and it is a good fillip to the opposition politics, because now Chandrababu Naidu will have no option but to oppose BJP as far as the 2019 Lok Sabha elections are concerned.
One comment by GVL Narasimha Rao, the BJP spokesperson, sort of caught my eye, Sanjay, and I want to sort of quote this verbatim to you. He says the TDP is resorting to lies to cover its inept governance. The TDP's exit is a timely opportunity for the BJP to grow in Andhra Pradesh. Sort of reiterates what you're saying as well. But this is real politics coming out. I mean, the daggers are out between the two parties who were allies until yesterday.
BJP has clearly decided to dump all big allies. That was very clear to Shiv Sena quite earlier. TDP was hoping against hope. TDP should have realized that this special status will Modi-led BJP oblige you and give you an opportunity to say that we got something from the center, or BJP will do it themselves and then take the credit for that. The way they did this with Bihar package, that I am giving you the package. So expecting BJP to help ally to create their new base, hold on to their base, take political brownie points, is not possible in the new ecosystem in Delhi. So TDP is out now as far as BJP game plan is concerned. BJP will try to increase its footprint. So if any allies they thought that BJP will be nice to them and they will give them adequate or more than they deserve seats in terms of 2019 Lok Sabha election. That is not going to happen. BJP wants to increase its footprint aggressively, and they are dumping parties like TDP and Shiv Sena.
Okay, moving ahead, Johnny Walker has been around for more than 150 years now. It's among Diageo's most well-known brands, but what keeps it walking among the younger generation is its innovative advertisement strategy, and that's coming from Ivan Menezes, the CEO of Diageo, in an interview to Bloomberg. Listen in.
We clearly stay very connected, our teams do, to understanding what the conversations and culture are about. We look at trend-leading bars and bartenders and what they're excited about. We track what's happening on social media with adults and what they're talking about. And that's what our marketing teams around the world need to be really good at. And it's actually the very exciting part of the job.
You own 2 out of the 5 most important spirit brands in the world, Johnnie Walker and Smirnoff. How do you keep those relevant?
Our job, I always say, is to make sure brands like these, which have been built over hundreds of years, are highly aspirational, relevant to the next generation of consumer coming through. So the 20-something-year-old in Brazil, Johnnie Walker needs to be and stay relevant, cool, aspirational, and that consumer needs to be willing to pay a premium for this wonderful whiskey. That's how we define our jobs. So these brands have to stay connected to culture, because things change. How young people socialize is changing, and we've got to make sure our brands fit in with the trends, and I call that's the day job at Diageo.
But what is that, through marketing? And does that change? You know, do you replace billboards with bloggers, or do you go to celebrities? Is it product placement?
It's a combination. So for example, in Brazil, one of the things we do is we have this wonderful truck beautifully decked up with Johnnie Walker that moves around the country. It goes to communities, and we host little events, and we introduce people to the whiskey. We tell them the story of all the single malts behind Johnnie Walker, the fact that in Johnnie Walker Black Label, the youngest whiskey was distilled before the financial crisis. You tell them the story of, and it's amazing how much interest we get. And when you bring a consumer into a brand through a mentoring experience, as we would call them, you get them for life. I always say the thing about our business is what you drink or what you serve at home says a lot about you. And so our brands need to live up to that expectation. Ivan
Menezes, talk to me a little bit about the US. It's by far your largest market. Do you expect it to remain so in 5-10 years from now?
The US is a fantastic market for us. North America is about half the profits of Diageo. It's about 1/3 of our sales. But what's really attractive about the US is a few things. One is the demographics are very positive. I refer to it as our biggest developing market. You've got the growth of the multicultural population that's very strong, Latino, African American, and Asian, all of which bodes very well for premium brands. It's also a young population. You have a growth of Americans turning 21 at a faster rate than, say, in Europe. And finally, the taste profiles are changing. There's a huge interest in the cocktail culture. Mixology is hot. Young people are drinking more spirits. They want to know how to entertain at home.
All we can say is have a spirited weekend. And thanks so much for watching this leg of Countdown. From all of us, it's goodbye. Small joy.